Okay, hi everyone. Good evening. We'll get started in a few minutes. We're just waiting for everybody else to come in. But we'd just like to check if you can hear me. Can you type one in the chat, please? Okay, thank you. We'll get started shortly. Give everybody like just a little bit more time. Okay. Okay, hi guys, good evening. Thank you for joining this webinar. So my name is Adele. I'm from Investing Note. Today we have two speakers with us to share on the Global Trading Playbook for 2026, talking about DLCs. So first we have Billy To. He is the Regional Head of Retail Research from CGSI. So he will be starting first, and then after that we will have Marcus from Société Générale to continue the webinar. All right. Without further ado, Billy, would you like to take over the floor?
Okay, let me just share my screen first.
Yeah. Okay.
Okay. Can you all see the slide?
Yeah. Okay.
Okay, and thanks Adele for
Yep.
the
Thank you.
introduction. Right.
All right.
Good evening, everyone. I'm Billy To. I'm the Regional Head of Retail Research at CGS International. So basically today we'll be looking at some of the key thematics in 2026 from the Fed pivot, the global liquidity shifts, AI capex cycle, and the China recovery cycle. Our goal is simple to share some of the opportunities that are in both the US and Hong Kong market, some of the key risks to monitor and how to tactically trade them using the LCs. All right, so let's dive in. Just a quick disclaimer. This is basically for general information and educational purpose. So nothing here should be taken as a financial advice or a recommendation to buy or sell any of the securities. All right. Okay, let's start with looking at how the global market performance has been so far this year. So I think if you look at the table here, you can see that this is basically the performance of the global, some of the major markets. The light blue here is basically the one in local currency, and then of course the other one is the changes in the US dollar. So if you can see from here, basically the US market actually lagged behind some of the global market performance. So as of 5th December, actually the S&P 500 has seen a year-to-date return of about 18.2%. The Nasdaq is 23.1 and the Dow Jones Industrial is 14.6, but it actually lagged behind the Bloomberg World Index of around 22.1% total return. Now, if you look at the performance against some of the major markets, they actually underperformed the likes of Europe, the North Asia, South Korea has done very well. Japan has done very well. And then even if you look at Hong Kong has actually outperformed the US market as well, right? Even in ASEAN, you can see that the Indonesian market and the MSCI Singapore actually outperformed the US market. But it's actually catching up, right? So if you look at on a 3-month basis, 3 months from as of 10th December, the US actually outbeat the Bloomberg World Index. So it's actually catching up. So the Nasdaq 100 actually outperformed the likes of Europe, Hong Kong, and China. In fact, if you look at Hong Kong market, we saw a pullback, so a decline of about 2.5% over the last 3 months. So it is still a year-to-date positive, but we've seen a slip into a decline. Basically, we're seeing some profit-taking activities, right? But of course, overall, the global market is still led by the North Asia winners like your South Korea and Japan. mainly due to the AI trade as well as the structural reforms in Japan. Now, looking at the ETF flow, you can see that things have remained constructive. I wanted to highlight the November numbers. We saw a moderation from where it was to a slight decline, but it is still at a very healthy level, above trading above its monthly average, right? So you can see that, in fact, towards the first 11 months plus so far this year, about 1.23 trillion actually flow into the equity market so far this year, and more than 4.5 trillion has actually entered the equity market through the ETF flow over the last 5 years. Why I'm showing this is because this actually shows the longer term investors, they're not really panicked. In fact, it shows that they're quite positive on the structural long-term growth of the equity market. They stay invested despite of the volatility that we saw in the market, especially during the November period. Now, going into the equity market alone, you can see that the November numbers have came down, right? But ETF flow remains strong. And then if you look at the charts here, this is on a weekly basis. We zoom in. The sharp moderation from in the last week of November is more of a normalization from where it was because there was a peak, there was a jump to 99.6 billion flow into the equity market on that week itself. So you can see that it actually came down quite a fair bit. But if you look at it from a daily basis, you can see that most of the days the flow continued to remain above the 1 month daily average flow. So this basically show that the ETF equity flow actually remains quite healthy into the global market, right? And of course, US continue to remain the anchor in the ETF fund flow. About 55.5% is actually going into the US market. And if you look at it from a sector perspective, most of it is going into tech, healthcare, and energy, especially in the November month itself. Now, for Hong Kong market, we look at the southbound flow. Basically, because this is where, if you look at the chart on your left-hand side, you can see that the southbound flow itself consists about more than 40% of the overall Hong Kong market trading activities, right? So it actually remains strong despite some of the moderation from where it was in August period, right? We saw quite a pullback from there. And if you look at by sector, you can see that a lot of this money is actually flowing into the new economy, which is basically your consumer discretionary, your information, your tech names, your internet names. Healthcare is basically your biotech, and of course, some of the communication services. So you can see that the old economy is not gaining as much traction as the new economy. Now, in short, what I'm trying to say is that if you look at here, you can see that the US market is basically in a cash-out mode. And the recent rally is really driven by the tech strength as seen by the Nasdaq 100 performance, right? ETF flows remain supportive. Meanwhile, for Hong Kong market, we saw that it has lost its momentum over the last 3 months, slipping into a rate despite a strong start to the year. Now, despite the decline in the last 3 months, we saw that Hong Kong Hang Seng Index remain on a positive territory year to date, with over 34% year to date return. Right, this is supported by some of the policy announcement in China, as well as the southbound flow that continues to show accumulation in Hong Kong tech, consumer, and healthcare names. Now, just a bit on the macro landscape so that you guys understand how it is. I guess this is important, especially after the Fed cut rate yesterday. I think there was quite a bit of disappointment on the US front. I think although the Fed did cut rate, but they are projecting just a single rate cut next year. I think prior to that, the market consensus is actually expecting 3 rate cut in 2026. Now, so this is basically just because we're focusing on the US and Hong Kong market, so I just highlight both the US and Hong Kong macro environment. Right, so if you look at the US, inflation is easing, but it remains sticky, especially the core inflation level. Hiring has softened. Growth is slowing, but it's not collapsing into a recession, so that's good news. So the US Fed, I think the interest rate cut that happened is basically very much in line with what expectations are. But the 1 rate cut projected for 2026 is a disappointment. But I do wanted to highlight this, that Trump do prefer a Fed chair that will push for a lower rate interest rate environment. And I think that the announcement that he's going to make at the start of next year for the replacements for Jerome Powell will be very important. So if you've seen Donald Trump's first term and his second term, you can see quite a few differences. And the key difference is that during this term, he actually pushed for a lot of things to go according to what he wanted to do, right? Just like your tariff, even if you look at how he wanted to push for regulatory, like for the AI chip export to China. So you can see a lot of things that Trump is pushing for. I guess in his second term, he's probably more political savvy to drive the direction that he intended to go. So we do think that the interest rate could actually still go lower despite the Fed projection of just a single rate cut for next year. So we did see the longer end yield. I think that's probably more to do with the volatile environment. I think there's a lot of concern on fiscal deficit, uncertainty on the Fed rate cut, as well as divergence in the global monetary policy. So for those of you who do not know, Japan is actually moving towards a monetary policy normalization, which means that they will probably increase their interest rate, moving away from the 0% interest rate environment. So that would probably affect the market for a fair bit, right? So there might be some uncertainty in the near term. Now, if you look at the Hong Kong side, things are moving towards, I think the best way to describe Hong Kong market or Chinese market is that it's moving away from crisis to stability and towards recovery, right? So if you look at some of the numbers, I did not show the charts here. If you wanted to, I can actually share it later on. So the industrial production and exports numbers have improved. Consumer sentiment is bottoming. Things are better now. There is also a targeted policy easing. So I think prior to this, the government has been quite reluctant to support the policy, but we are seeing that change of tune. So there are actually a lot more policy that's targeted to help to boost the economy, right? It's not a bazooka policy, but it's a very targeted policy to help to support the economy, right? The southbound flows that I showed earlier remain strong despite some moderation. Of course, I think the key thing is the property risk that's still present, but it's actually in a much more controlled manner. And more importantly is that the valuation of the Hong Kong market is actually at a very attractive level, putting them in a very good position for recovery, especially if environment were to remain as it is. I just wanted to highlight this. I think we've talked about, there's a lot of concern in terms of the AI risk, and that will actually affects in terms of sentiment on the global, especially on the risk environment. I think if let's say there is a collapse in the tech players, this will actually lead to a decline across the board, including both US and Hong Kong market. So do monitor for developments, news flow, and I think those will be very important. But I do think the structural growth story for the AI remains there. So if you look at the capex and the by the hyperscalers actually remain strong despite some moderation. I think key things to look at is really the adoption of especially on the enterprise front in terms of the AI usage on corporates. I think one area to look at is basically through Microsoft, especially when they announce their earnings. All right. And if you look at this part here, I think this is something that's underappreciated. So I wanted to highlight this a bit. The US money market fund actually surpassed 8 trillion recently, right? And it actually, if you look at it compared to about last 4 to 5 years, it's actually almost double up. So there is plenty of cash to deploy in the market, especially if let's say we are to enter into an interest rate, into a lower interest rate environment. So we should see a bit more money market, those funds that are in the money market space flow into the equity space. And of course, on valuation, I think I talked about the Hong Kong valuation. So if you look at the Hang Seng, you can see that it's trading at 12.5 times PE. So it is above its 3 years average of 9.9, about 10 times. But this is a strong rating from a very depressed level. And we do think that at this level, it's still trading at a very attractive level. So if you compare that to even your Japan, your US market, you can see that it's actually at a very attractive level in terms of valuation. US is really the premium market, but I think that it will be driven a lot more by the earnings growth. So do watch out for earnings announcement, especially by the big tech names. Right. So these are just some of the key summaries for you to take a look at later on. All right, so some thematic stock basket to look at. I think we start with US side. So you can see the AI infrastructure super cycle. So I think, like I mentioned, I think the backbone of AI story will remain. I think the key risk for this area will actually be competition. So for example, the GPU dominance by NVIDIA, if let's say it were to be affected by the emergence of other competitions or alternatives like the TPU chips by Google, I think that will actually affect the share prices. This is more due to competition rather than anything else. And I think supply chain constraint will be a key factor rather than demand for it at this point of time. Then if you look at the US cloud and software AI monetization, so some of the examples like your Microsoft, Alphabet, Meta, Amazon, I think 2026 will be the year that these companies must prove that AI could monetize through pricing, enterprise adoption, and cost savings, right? So of course, there are more names than just this form. Just showing some of these names because they are also within the DLC universe, right? So the best way to really play this with DLCs, I think, is really to look at during post earnings momentum. So for some of these players, it will probably be better to just look at the at Nasdaq 100 index rather than to play on these individual stocks themselves. But if you are more confident to look at the stocks individually, you could also do that. Then the next is basically your US consumer and AI and enable brands. I will probably highlight Apple in this case. Think the part of the thing will really be the strong ecosystem space that Apple has, as well as the loyal base that it has. So introducing AI into this ecosystem will actually strengthen them further. Aside from that, you also have your Amazon, the e-commerce, and your S-cycle recovery. So these are things that will basically be useful, especially during big events like the product launches or your Prime Day or your Black Friday. Then there are some US innovation and transformation names. So I actually categorize so that it's easier. So for example, if you look at AI productivity platforms like Microsoft, if you're looking at automatic cars and all that, robot will be your Tesla. Then there's also Apple on the hardware and their urban transformation. And then of course, e-commerce will be your Amazon, right? So just a bit of highlight. So for example, I'm just going to highlight some of them. So if you look at Microsoft, it actually has the most complete AI platform, your enterprise ecosystem to Windows, the itself to investment in large language model in OpenAI as well as their chip strategy. So it actually has the most complete ecosystem across the various big tech names. And it is no longer just a tech company. It's actually the new productivity layer of the global economy. The way I put it is, if you look at in the past, you all need Windows, right? But add on AI into it, I think that will be a bit even more transformative. So, for example, even like my company and a lot of the enterprises are adopting Copilot as part of their business solution. So this will be really good for index level trades because of the lower volatility in the company. So I think the index level trade will probably be better for those who wanted to look into DLC. Tesla is probably one of the highest volatility DLC trades on SGX. I think Marcus can confirm that later. I think it is. So it is basically transforming from just an EV company to look to AI, robotics, and energy. So there are a lot of excitement within the company, especially on the announcement of their new developments and especially on full self-driving and all that. But I think execution will be the key risk. The idea is if you believe in Elon Musk, I think Tesla is something that you want to have an ownership in. For Apple, I think it's late to the AI cycle, but it has a strong ecosystem and loyal fan base. So I think this is good for longer term investment. And then Amazon is basically how it transforms its AI infrastructures into its logistics automation. So those are very key things. They also have the cloud services. In fact, they're actually the largest, but of course, there's a lot of competition coming from Microsoft and Google Cloud. So there will be quite a bit of risk, but it's best traded, I guess, around the Prime Day as well as when they announce their results, especially in terms of how the adoption of their cloud services is. All right, I'm just gonna jump to Hong Kong. I wanted to highlight it a bit, so I rushed through the US side a bit. So if you look at the Hong Kong internet and platform ecosystem, right? So the Hong Kong big tech names are actually deeply undervalued with improving fundamentals. So some of the key catalysts. So for example, if you look at Tencent, every time they announce a lot of their gaming approvals and new developments on the tech front, you see movement in the share prices, right? So even I think in their e-commerce, I think there is a pricing competition. So like your Meituan, your JD.com. So if let's say the pricing war were to end by 2026, they're expected to end by the start of 2026, we should see a bit of movement on the front. So I do think that HS Tech DLC spoke best for these players because of the nature of it. It's easier for you to tap onto it rather than look into each of the stocks individually. There are some key risks. So for example, your China consumer slowdown, I think that's something to look out for. Internet regulation is something that is probably new risks for those who are looking into Hong Kong market, but it's very important to look at. And then there's also competition from the likes of your PDD and Alibaba. So that this will be an area to look out for. Intense competition, but a lot of opportunities. Now, the financials and the insurance value trade, I think there's a lot of value there. There's also a lot of good dividend plays in China, Hong Kong financials, like a China Merchant Bank, Ping An, HSBC, and AIA. But and of course, with the improving credit cycle in China, we do think that this sector will actually benefit from it. Of course, the key risk will really be the property sector. So do watch out for news, especially if there's a relapse in and it will affect the industry, right? So do watch out on that front. southbound inflows actually a lot go into the financial industry, especially at the start of the year. So they are one of the key beneficiary of that front. Aside from that, you also have your telco and your SOE. So there is a dividend and reform story there. So I think this is where you look at China a bit more stable sector. There is also some policy tailwind. So if you look at your China Mobile, your CNOC, PetroChina. So CNOC is the China National Offshore Oil Company, right? So any movement on the oil market will actually affect these players. So it is actually quite good for steady and directional trade, especially when you look at the oil market. If let's say there's a news on the oil market, it provides quite a bit of opportunities for investors to tap onto it. State-owned enterprise reforms is also interesting to watch out for. So there will be some announcement on the policy front in December by the Chinese government. So do watch out for news on that front if you were to make trades on this sector. Then last but not least is the consumer and EV and manufacturing play. I combine them together because I think that it's important to notice that the manufacturing players in China they're no longer just the local champions. They are actually going into other countries, especially in Europe and ASEAN. So especially on your EV front, you can see that a lot of exports on the front. So if things were to sustain, so we should see an improvement on that front. So some of the key risks, so for example, BYD has done pretty well in the export in the penetration to different markets. But of course, the key risk is really the pricing war in the EV space. Then, of course, some of that, your battery innovation cycle. So watch out for news on that front. So this will actually help investors to really take advantage of some of the news flow. I think on the export players like your Xiaomi, I think the consumer sentiment has turned positive. So the likes of your sportwear and electronics will also benefit from that. Key risk includes your tariffs, especially on from EU, and then of course the price war intensity on the EV space that I talked about earlier on. Right. So in short, I think that there is quite a bit of opportunity in the US and Hong Kong. I think the best way to put it is that I think AI infrastructure continues to remain US strongest team play. But of course, your capex and supply chain risks are rising. Cloud and software will be an area to watch out for, especially on how they monetize in 2026. So US mega cap names continue to lead in innovation, but do watch out for in terms of how this different transformation affect the market. So for example, Tesla has a lot of big strategy, but you have to watch out for the execution risk on the front. For Hong Kong, I think the internet space is deeply undervalued and is supported by improving fundamentals and southbound flows. Of course, your key risk includes your consumer sentiment and how the competition space will pan out in the area. So do watch out on news on that front. Hong Kong value plays offer recovery and dividend play tied to some of China's soft landing and reform tailwinds. All right, some key risks to watch out for before I pass the time to Marcus. So I think basically there are four key things to watch out for. I think on your macro risk, mainly I think the interest rate environment may be one of the key things to watch out for. If sticky inflation were to remain, this could lead to a high interest rate environment, which could actually affect some of the, especially on the US front, because I think the valuation is on the high side. So that could actually affect some of the market sentiment. Earnings and AI risks, I think we've talked about that already. Policy and geopolitical risks, we have seen a lot of that came down, right? In the second half, a lot of this has toned down. We've seen a lot more certainty in terms of how Trump will engage with other parts of the world. But do watch out on this space because things might flare up again, especially as the midterm elections is coming in 2026. So there might be a lot more news flow, a lot of noise on that front. So that might actually affect the market a bit. And of course, your market structure and liquidity risk. At this point, we are quite positive on that front, as I've shown earlier in terms of the ETF flows, your southbound flows, some of the money, some of the funds that are in the money market space, right? But do watch out on this space in terms of the risk. All right, I think that's it from me. Marcus.
Okay, thank you so much, Billy. If you guys have any questions, you can feel free to drop them in the Q&A section first. We'll get to it at the end of Marcus's section. Okay, now I will pass the floor to Marcus. You can go ahead.
Good evening, everyone. I hope you guys can hear me clearly. Let me just share my slides. All right. So good evening, everyone. My name is Marcus. I'm from Société Générale. So we are a French bank, all right? We are a global bank. But of course, our headquarters is in Paris, in France. So you can say that we are one of the biggest banks in Europe. And we are also known for our structured products, our listed structured products especially. All right. So we do have this daily leverage certificates. It is a listed structured product that is listed on the SGX, so the Singapore Exchange, their securities market. We do have this DLC's daily leverage certificates listed on the SGX that you can use to gain leverage exposure to Singapore, Hong Kong, and US stocks and indices. All right. So I'm here to share with you a very quick one today, a quick preview of what the DLCs are. And more importantly, I want to show you guys where you can go to find out more information about the DLCs, because it is a really exciting product that we have listed on the SGX. And it has been fast growing, and I think that you can really benefit from it, especially if you are an active trader yourself and a global markets trader. Right, so the daily leverage certificates is somewhat like a leverage and inverse product. All right, so similar to the leverage and inverse ETFs that you might know of, I think it's quite common that people heard of leverage and inverse ETFs. But well, have you heard of the daily leverage certificates that actually offer the same kind of payoff as a leverage and inverse ETF, but we can go higher in terms of leverage. So the DLCs is a fixed daily leverage product, all right? So it's a leverage and inverse type product, and it can give you that 3 times, 5 times, or 7 times leverage on the underlying index or underlying stock daily percentage performance. All right, so your leverage and inverse ETFs in the US, your TQQQ, SQQQ, especially those are the ones that give you 3 times leverage, 3 times performance of the Nasdaq's index performance. All right, so that is the TQQQ, SQQQ, that's the leverage and inverse ETFs. For the DLCs, we have 3 times as well, but we can go up to 5 times and 7 times leverage on the Nasdaq index as well. All right, so being in a certificate structure, we are able to go higher in terms of leverage, whereas those leverage and inverse ETFs out there, they're usually capped at 2 times or 3 times leverage only. All right, so we do have 3 times, 5 times, or 7 times leverage, and we also have a long DLC and a short DLC, so you can trade both directions on the market. All right, so if you're bullish on the underlying stock or underlying index, you will buy the long DLC. But if you are bearish on the underlying stock or underlying index, then you would buy the short DLC. All right, so all the DLCs are linked to an underlying index or underlying stock to give you that 3 times, 5 times, or 7 times performance. And the DLCs are listed and traded on the SGX. All right, so we are the issuer, SocGen. We issue these DLCs, we list it on the SGX securities market, and then you can trade it on the SGX market through any regular stock brokerage account, including CGS. All right, so we are the issuer, but we are also the liquidity provider. All right, we are the designated market maker for all our DLCs. So we are there throughout the trading day to provide bid and offer quotes, bid and offer volumes, prices and volumes on each and every one of our DLCs throughout the trading day for people to buy and sell the DLCs. All right. So you are trading with SocGen in the sense you buy from SocGen DLCs and then you would sell back the DLCs to SocGen. So we are the liquidity provider for these DLCs listed on the SGX. All right, so I mentioned that our DLCs cover a wide range of underlying stocks or underlying index across the Hong Kong, Singapore, and US market. On the Hong Kong side, which is our most popular shelf, all right, we have the Hang Seng Index DLCs, Hang Seng Tech one as well, and Hang Seng China Enterprises Index DLCs. So Hang Seng Tech DLCs is our most popular range. All right, we go up to 5 to 7 times leverage on our index DLCs. So on the Hang Seng Index, Hang Seng Tech, and Hang Seng China Enterprises Index, we do have up to 7 times long and short DLCs on them. On the Singapore indices wise, we have the MSCI Singapore Index, the SIMSCI. And of course, the US indices, we have the key ones, Nasdaq, S&P, and Dow Jones Index, that this index underlines the DLCs we offer up to 7 times long, 7 times short exposure to these major indices. All right, on the single stock shelf, this is just a sample of the single stocks that we have, but we have 193, currently 193, soon to be around 200 DLCs listed on the SGX, and a lot of them are also on the single stock underlyings. All right, so we have 5 times long, 5 times short DLCs on the key Hong Kong stocks. So the popular ones like big China big tech giants, Tencent, Alibaba, Meituan, Xiaomi, we do have 5 times long and short DLCs on them. We also have the more old economy stocks like Ping An, Sunny Optical, Geely Auto. So we have a wide range of Hong Kong stocks that you can choose from. All right, Hong Kong stock DLCs that you can get to trade. We also have the Singapore single stock DLCs. So these are your main blue chip stocks in Singapore, your 3 Singapore banks, DBS, OCBC, UOB, as well as some of the other ones like Keppel Corp, Sembcorp, Wilmar Venture. We do have 5 times long, 5 times short DLCs that track these Singapore stocks as well. And of course, the latest expansion to our shelf is the US stock underlyings at the top right, at the bottom right corner of this table. The US stock DLCs is our latest expansion, and we have expanded to the Magnificent 7 stock DLCs. So we have Nvidia, we have Tesla, and the rest of the Magnificent 7 stocks. We've also just recently in the last 2 weeks, expanded into Broadcom DLCs, as well as the other one, AMD DLCs outside of the Mag 7 stocks. But for each and every one of these US stocks, we have 3 times long and short DLCs on them. All right, we have a 3 times long and short DLC on Tesla, on Nvidia, that you can use to gain exposure to the US stocks, to these US stocks. So for the single stock underlying, for the Hong Kong and Singapore ones, currently we go up to 5 times leverage, 5 times long, 5 times short. And for the US stocks, we currently go up to the maximum of 3 times long, 3 times short on those US stocks. Okay, so this is a wide range we have that you can choose from to trade using the DLC product. You can gain access to Singapore, Hong Kong, and the US market. All right, but before we get too excited, let's go into the basics of the DLCs first. I mentioned that it is very much similar to a leverage and inverse ETF in terms of its payoff, giving you that 3 times performance, 5 times performance every day. All right, so let's see an example here of how does the DLC provide the leverage. All right, so the performance of the DLC, the daily percentage performance of the underlying asset, all right, times by the leverage factor will equals to the daily percentage performance of the DLC. So you got to think a bit in terms of percentage performance. All right, so if DPS was up by 2% today versus previous day close, so up 2%, from $50 it goes up to $51, for example, my 5 times long DPS DLC would gain 2% times by 5, that is 10% gain, while my 5 times short DPS DLC will fall in value by 10%. All right, so your gains are magnified with the leverage factor, but please note that your losses are also magnified with that leverage factor. All right, so every day on a close basis, my 5 times DLC would track the underlying stock, with that 5 times performance. If it's up by 2%, then the DLC will be up by 10% for the long side. Short side will be down by 10%. So this happens every day on a close basis from the day that the DLC is listed all the way to the expiry date. Every day you get that 5 times performance of the underlying stocks, daily percentage performance on a close basis. Okay, so that's quite simple, right? In terms of the payoff of the DLC, exactly you get the 5 times every day performance. So you can see here that it's very much similar to a LNI kind of product, leverage and inverse ETF, leverage and inverse product. All right, so at this point, I think it's good to know, or at least I hope that you understand that this DLCs is nothing like an option type product. All right, there are other leverage products out there like covered warrants, derivative warrants, or even options itself. Right, those are option type products that give you leverage. But for the DLCs, the leverage is not. This is not an option type product at all. All right, there is no out the money. There's no in the money. There's no out at the money kind of concept. There is no strike price. There is no time decay. There's no impact volatility. So there's no optionality impact on this at all. All right, the payoff is much more linear as compared to an option type product, and therefore perhaps more transparent for you to see how does the DLC move in line with the underlying move. Underlying move 1%, DLC move 5%, underlying move 2%, the DLC move 10%. So it's a bit more linear in that sense. And there is no option pricing involved in this DLCs. So nothing like a covered warrant, nothing like a derivative warrant, nothing like an option. This is more like a fixed leverage product. It's more similar to a LNI ETF. Okay, so let's look at an example here of our 5 times long Alibaba DLC. So you can see the stock code over here. All the DLCs will come in a 4-character stock code. All right, so this DLC, the stock code is DKPW. So if you go into your stock brokerage trading account, the same one that you will use to trade Singapore market, to trade the DBS shares or UOB shares, in that very same platform, if you key in DKPW, you should be able to see this Alibaba 5 times long DLC. All right. So this is a long DLC. So remember, if you're bullish, you will buy the long DLC, right? So if you are bullish on Alibaba stock listed in Hong Kong, 9988.Hong Kong, you would buy this long DLC DKPW. All right, in the name of the DLC, you can see at the top there next to the 4-character stock code is the name of the DLC. All right, so the name of the DLC will always start with the underlying stock or underlying index that it tracks. over here you can see that this DLC tracked the Alibaba stock listed on Hong Kong, 9988.Hong Kong. So Alibaba is in the front of the name, followed by this is a 5 times leveraged DLC, and then this is a long DLC, bullish by the long DLC, all right? And then SG stands for Société Générale. So we are the issuer of this DLC. And then followed by the expiry date in year, month, date format. So unfortunately, all the DLCs do have an expiry date to it, even though it's not really needed. All right, this is more like a LNI product, like an LNI ETF. There's no expiry, right? So the DLCs technically do not need to have an expiry date, but due to certain regulations in the Singapore market, we must have an expiry date for each and every of our DLC, and they're usually long dated, like 2 years or 3 years maturity, right, from the day it's listed. All right. But so if you happen to hold a DLC and you are holding it to hold it to maturity, all right, to the end of the maturity, all right. So this DLC will expire on 13 November 2025. If you hold it past the expiry, do not worry. Whatever the value of the DLC is, the day before the expiry date, that is the valuation date, SocGen, we will just settle back the value of this DLC back to holders via the SGX CDP. All right. So compared to your covered warrants or derivative warrants out there in the market, where at the expiry they'll determine whether is it in the money or out of the money kind of thing before they decide whether there's any cash settlement amount, the DLCs do not work that way. All right. So every day you get the same 5 times performance of Alibaba performance, all the way from listing date all the way to expiry date, and whatever is the value of the DLC at the end of the expiry date, there we will just cash settle it back to holders. All right. So every day you get that same 5 times performance, no matter whether is it 6 months away from maturity or 1 day away from maturity. Every day you will still get that same 5 times performance of the underlying stocks daily percentage performance. So you can see over here this DKPW in this screenshot of our website over here. This DLC was up by around 17+% on this particular day earlier this year, on the back of Alibaba stock gaining 3.5% that day, intraday basis. All right. So that's where you can see where the 5 times performance is, right? So that's where Alibaba is up by 3.5%. So the DLC is up by around 17 to 18%. And the DLCs are usually priced lower at around 20 cents to $2 or $3. So this one is priced at 92 cents, all right, for now. All right, so the DLC price will move in line with the underlying stock's daily percentage performance multiplied by 5 every day on a close-to-close basis. Okay. So remember, you're bullish, you buy the long DLC, but if you're bearish on Alibaba stock, you can buy the short DLC to profit from your view. All right. So this Alibaba short DLC Z7MW, all right. Z7MW is the stock code for this short DLC on Alibaba. All right. So you can see that Alibaba stock was up by around 3.5% that day. So the short DLC fell by 17 to 18%, 5 times that of the Alibaba's stocks, their percentage performance. All right, so you can see over here, Alibaba stock rise up, so the value of the 5 times short DLC decline. If Alibaba stock had instead fallen by 3.5%, then you would see that this short DLC would have gained 17 to 18%. Okay, so there's a short DLC and a long DLC. So whatever it is, you initiate your position with a buy trade. You either buy the long DLC if you're bullish on Alibaba, or you buy the short DLC Z7MW if you are bearish, you have a bearish view on the Alibaba stock. Okay, so this is you can check out more on our website. We do have this interactive chart, and all the terms of this DLC is listed below on this page. So do visit our website later, to check out all the DLCs that we have listed on the SGX. You will find each and every one of the DLC will have a terms page like this, where you can see the price of the DLC, you can see our bid offer codes, you can see the underlying price, you can see the terms of the DLC as well as the listing documents as well. Okay. So the DLCs are leverage products, right? So it's a fixed leverage product, and generally they are short-term trading instruments, all right? So short-term, it's not a buy and hold long-term investment kind of instrument, all right? So ideally, these DLCs are used for day trading, so intraday trades, all right? Or swing trading. Not everyone has the time to really monitor the market the whole day, all right? But you can use this DLC quite nicely for swing trading as well, for a trend trade for a few days or a few weeks, all right? You can use it for short-term hedging purposes as well on the short DLC. But generally, the DLCs are a short-term trading instrument. Intraday, a few days or a few weeks, but definitely please do not hold on to the DLCs for months or even a year. All right, this is not a long-term buy and hold instrument. This is a short-term tactical trading instrument that you can use to capture short-term market opportunities in both Singapore, Hong Kong, or the US markets. All right, so let's get a day trading example. Okay, day trading is very popular on the DLCs given that it's 7 times leverage. You can easily look at double-digit gains for a 2-hour or 3-hour trade, depending on the underlying move. All right, but double-digit gains and losses are very common on the DLC. So with this kind of double-digit gains and losses intraday, day trading is very popular on the DLCs. So our most popular DLCs, the Hang Seng Tech DLC shelf, all right, you can see that the Hang Seng Tech 7 times long DLC over here, WYHW, gained 17% intraday on this basis. You buy in the morning, you sell back at 2 p.m., you can make a 17% gain on the back of the Hang Seng Tech index gaining 2.4%. All right. So for a short-term trade like this, intraday trade, 4-hour, 5-hour trade, double-digit gain, 17 to 18%. That's why people like the DLCs for day trading purposes as well. All right. Of course, really not everyone can look at the screen the whole day and actively monitor position. So there are quite a lot of people who trade the DLCs for swing trade as well, or trend trading. All right, you can see that this 5 times long XPeng DLC. So the XPeng stock listed on Hong Kong Exchange, 9868.hk. This DLC tracks that Hong Kong XPeng stock times leverage is a long DLC. So 1 month time frame, all right, in a 1 month time frame, you can see that the 9868 XPeng stock was up by 43.5%, all right, in this 1 month period. And on the back of this increase, the long DLC VTMW gained 295%. All right. So this is where the power of the trend trading is, right? In a 43.5% gain on XPeng stock, this 5 times long XPeng DLC delivered 295%. Right, over here you might see some of them those of you who are sharp, you might see, hey, XPeng stock gained 43%. Multiplied by 5, that's almost 215%, right? How come the VTMW gained more than 215%? It gained 295%. All right. So that is where the power of the DLCs is as well. In a nice trending market like this, where XPeng stock has been rising day on day and general uptrend, to gain 43% cumulatively, the VTMW, the 5 times long DLC, can deliver more than the 5 times performance, right? So you can deliver more than the 5 times performance in a nice uptrend, a nice trending market, due to the compounding effect. All right. So for DLCs, there is this compounding effect feature which I'll touch on very, very soon. It's a very important feature. All right. But in a nice trading market like this, you can deliver exceptional gains. All right. I can give you that more than the 5 times leverage performance. As you can see from this example of the 5 times long XPeng DLC over here. Okay. So let's study the compounding effect feature later. All right. Lastly, in terms of the trading ways, approaches for the DLC, we have a whole shelf of short DLCs as well across different underlyings. All right. So this Tesla short DLC, you can use the Tesla short DLC to hedge your long-term buy and hold investment on Tesla shares, for example. All right. So you're a believer in Elon Musk, you're holding the Tesla shares all the way to the moon kind of thing. You're gonna wait the long term. All right. But you see any short-term correction coming on Tesla shares, you could possibly do a short-term hedge using the Tesla short DLC TSXW or any of the Tesla short DLCs to make some gains in this short-term hedging trade to offset your paper losses on your Tesla shares. So you could deploy a short-term hedging strategy using our short DLCs on Tesla, on Alibaba, on the index as well. But the short DLCs offer you the opportunity to profit or to make gains in a downward trending market. Okay, so that's the last strategy there. Let me before we go into the compounding effect feature, which I really want to touch on, I'm trying to share a bit about our latest expansion on the US stock DLCs. This is a very interesting proposition here because the US stock DLCs is the first of its kind in Asia, where you can get that 3 times long, 3 times short exposure to the Magnificent Seven stocks during Asian hours. All right, during Singapore market hours, 9 a.m. to 5 p.m., you can gain that 3 times long, 3 times short exposure to Tesla, to Nvidia, to Apple, to the US stocks, to the Magnificent Seven stocks, including AMD and including Broadcom as well. Okay, so this is our current shelf. We've just added AMD and Broadcom as well. I've not added it to this table, but if you go to our website, you will see the full list of the US stock DLCs over there. So every single stock or US stock, Tesla, Nvidia, we will have a 3 times long and a 3 times short DLC. All right. So if you are bullish on Tesla stock, for example, you would buy the TSYW, right? And that's denominated in Singapore dollar currency, all right? So we also have a US dollar currency one. If you want to choose that one, you can always trade that one as well. But most of the time, most of the flows, we do see it on the Singapore dollar currency one, all right? If you want to short Tesla, 3 times short Tesla, you can buy the short DLC RLSW is the stock code, all right? So you could do look this up into your trading platform. You should be able to see these 3 times long, 3 times short DLCs on each and every one of our US stocks that we offer. And of course, Tesla and Nvidia are our most popular range. All right, they are the most high beta kind of stocks, and therefore on the DLCs, it's even more exciting with that 3 times leverage effect. So we do see a lot of our flows, a lot of turnover on the Tesla and Nvidia DLCs. All right, so some of you might be wondering, hey, these DLCs are traded during SGX market hours, right? How does it work? The US market is closed. All right, US market is closed during Asian hours. How do you trade the US DLCs? All right. So the US stock DLCs are traded only during SGX market hours. All right. Only during market hours. All right. SGX market hours, 9 a.m. to 5 p.m. Singapore time. All right. That's when you can trade the DLCs. But it does move during Asian hours. There's been a rising trend of actually US stocks being traded during Asian hours in the last couple of years. So this is called the alternative trading systems. All right. So there are brokerages out there that offer you Asian hour trading of US stocks. All right. And therefore there is actual price discovery of US stocks, of Tesla, of Nvidia at 10 a.m. Singapore time and 11 a.m. Singapore time. And our 3 times long and short DLCs will track this Asian price of the US stocks traded during Asian hours. With that, 3 times and 3 times long, 3 times short leverage exposure. Okay, so please do visit our website to understand a bit more about the US stock DLCs. This one, I think, is not that intuitive. But I hope that once you visit our website, you'll be able to see that that this is something that's interesting, because in the case of any high impact news during Asian hours, you can really go in at 10 a.m. Singapore time, 10 a.m. Malaysia time to really trade the US stock DLCs to gain a 3 times long or 3 times short exposure to Tesla at 10 a.m. Singapore time ahead of the US market open. All right, it's a new trading window that you can consider. All right, and then there's a 3 times long, 3 times short effect as well. Okay. So please do visit our website to find out more about the US stock DLCs. It's really quite interesting, and it's really one of the only instrument, if not the few instruments in Asia that offer you this kind of 3 times long, 3 times short effect exposure, average exposure during Asian hours. All right, quickly, I want to go into the compounding effect, because this is one very important feature that you must understand before you trade any of our DLCs. All right, you must understand that there is this compounding effect feature on the DLCs, similar to leverage and inverse ETFs, similar to leverage and inverse products out there. There will always be this compounding effect feature. All right, they can work very well for you in a nice trending market, but can work against you in a sideways or volatile market. So the table on the left over here is a trending market, where the underlying is up by 1% on day 1, up by 2% on day 2, up by another 2% on day 3. So cumulatively, over the 3 trading days, this underlying is up by 5%. So my 5 times long DLC, every day I'll give you that same 5 times performance. So on day 1, it's up by 5%. Day 2 is up by 10%. Day 3 is up by 10%. All right. But cumulatively, it gained 27%. All right. So 5% times by 5 is only 25%. But this 5 times long DLC gained 27%. So this extra 2% is from the compounding effect feature of the DLC, where in a nice trading market, you get that compounded gains. All right. The 10% on day 2 is based off a higher base. The 10% on day 3 is based off a higher base. So you get that compounded gains, and cumulatively, you get more than the 5 times performance. So that's one of the very powerful features of the DLC, where in a nice trending market, you can get more than the 5 times leverage. You can get that compounding gains effect. All right, compounded gains effect. Of course, that's one good thing. In a nice trading market, the compounding effect can work very well for you, but you have to note that in a volatile or sideways market like the table on the right, where the underlying is up by 2% on day 1, down by 4% on day 2, and then up by 7.31% on day 3, the cumulatively, the underlying gain 5%. But the DLC, every day you still get the same 5 times performance. Day 1 up by 10%, day 2 down by 20%, day 3 up by 37%, but cumulatively it only gained 20%. Less than the 5 times performance, right? All right, so that's where the compounding effect feature will not work so well for you in a volatile or sideways market like this. Okay, Therefore, it's also one of the reasons why the DLC is not a buy and hold instrument, right? It's a short-term trading instrument because in the long run, markets are generally sideways, and then you don't have a visibility on the trend as well. So the compounding effect can work against you very more often than not in the long run. So this is why another reason why the DLCs are short-term trading instruments as well. Okay, so I want to skip because I want to show you guys our website to dlc.socign.com. I'll give us a quick tour of our website so that you can know where to find out more information about DLCs before we go into the Q&A portion. All right, so let me just share my website. Okay. All right. So I hope you can see here, this is our website, dlc.socign.com. All right. So under the education tab over here is where you can find more information about the DLCs. All right. You can read up about DLCs here if you are more of a reader. And there's a lot of illustrations as well on the compounding effect feature and other features of the DLCs as well. So I encourage everyone to visit our education tab over here. You can find a lot of information about the DLCs. You can also watch some videos, so short clips on the DLCs, like how to select the right DLC for your target exposure, how to calculate profit and loss, how does the US stock DLCs work. These videos, I hope that will help you as well. Short 3 minutes, 4-minute video to help you better understand the DLCs as well. All right, so we have a lot of education resources over here, videos, handbooks, FAQs for you to read as well. And under the products tab, you can find the full list of DLCs. So we currently have 192 DLCs listed on the SGX. All right, so you can find all the DLCs over here. You choose the underline that you want. You choose the long or short DLC, and then you can choose the leverage factor. You want 3 times, 5 times, or 7 times DLCs. Right? Then you can click into any one of them. You can find the DLCs, and then you can see the price over here, etc. And then, sorry, you can find the terms of the DLCs as well, here as well, including the term sheet and SLD, the listing documents. And you can find the interactive chart over here to see how does the DLC move with the underlying. All right, so you come here to see the DLCs, you see where our bid and offer are, you see what the price of the DLC is, etc. You take the stock code YPCW, and then you go to your brokerage trading platform to buy and sell the DLCs over there. All right, so you can come here as a reference, this website, but you always execute the trade to buy and sell the DLCs on your stock brokerage platform, right? Whether is it with your trading platform to trade stocks, all right, with your broker. Okay, so we have a lot of tools over here as well for you to look at it, etc. And then I mentioned about the US market, US stock DLCs. You can find a dedicated tab over here on the US market to see our different DLCs that we have on the US stocks and US indices. All right, you can find the Asian hour price as well of Tesla. So Tesla price, Asian hour price is over here. All right, under here, and you can find more information about the US stock DLCs over here as well, in our FAQs over here. So we have a dedicated tab for it. We can find out more information about the DLCs. All right. So please have a tour of our website. Visit it. Just browse through it, see more about education tab and the products tab. Have a look at it. And of course, if you have any question at all, you can call our hotline here, a simple number 6226-2828. Or if you want, you can always drop us a note over here as well in our contact us form at the top. If you have any questions or any feedback on the DLCs, please do write into us. Do let us know, and we will definitely reply you very soon to help you understand the DLCs a bit more. Okay, so do visit our website, dlc.socign.com. I'll put it into the chat so everyone can also have a look. And I hope that you guys will visit our website, will learn a bit more about the DLCs, because it is a very powerful instrument that you can use for your short-term trading needs to express your views, short-term views on the market in Singapore underlines, Hong Kong underlines, or even the US underlines that we have now. Okay, so please do have a visit our website and really reach out to us if you have any questions at all on the DLCs. My team and I are on standby. During SGS market hours, you can give us a call. If not, you can always write into us and reply to you within like 1 or 2 business days. All right, thank you very much, everyone. And over back to Investing Note. I think we are to MSCI Note. I think we're doing the Q&A now.
Yes. So thank you so much, Marcus, for sharing. If anyone has any questions, you can put it either in the Q&A or in the chat right now. We do have questions in the Q&A. Can you see them, Marcus? And
Yeah. Maybe
Yeah.
I answer first. I think on the ETF, I think ETF in general is more reactive. So the flow is there's a crash in the market. So usually we'll see a de-risk in terms of the flow, right? So for example, we saw in crypto when prices collapse, there is an outflow in the ETF space for the cryptocurrency, right? But it does provide us a bit of insight in terms of where investors are looking into, especially for the longer term investors. Then I think on the second question on where to find Hong Kong company financial reports, news and all that, I think basically the main one will be your Hong Kong Exchange portal. That's one of it. Or you can just follow our research where we update quite a few things, right? I think that's the one on that. I think there are two on the DLCs in the chat, not in the Q&A box.
Yeah.
Maybe Marcus.
Mark,
Okay.
go ahead.
Yeah, I think I see a question on is the DLC leverage mechanism similar to leverage ETFs out there? Just that it's timed at Asian trading hours? Absolutely correct. All right, so the leverage mechanism on a DLC is exactly the same as a leverage ETF. All right, your TQQQ or your SQQQ in the US, the payoff is exactly the same. Just that the DLCs are all listed on the SGX, so it's only tradable during the SGX market hours, 9 a.m. to 5 p.m. All right, and of course the DLCs mentioned that we go higher in terms of leverage. All right, so the ETF is a fund structure. Right, for the DLCs is a certificate structure. And in that structure, we are able to go higher in terms of leverage to 5 times leverage, 7 times leverage as well. All right. So that's one of the difference between the DLCs and the leverage and inverse ETF. But otherwise, the payoff is exactly the same, where you get the same 3 times, 5 times, or 7 times performance on the underlying stock called underlying index, daily percentage performance every day on a close-to-close basis. The payoff is exactly the same as a LNI ETF. Okay. The lot size for one DLC, is it 1,000 units? No. I think SGX has reduced the units already. So the lot size for DLCs is exactly the same as a Singapore share. All right. You buy and sell the DLCs the same way that you buy and sell the Singapore shares, DBS shares, UOB shares, etc. And they also share the same bought lot size, 100 units. All right. So if you have a $1 DLC, the minimum units is 100 units. So your minimum investment sum is $100. And that's another reason why I think also people like to trade the DLCs to gain exposure to Hong Kong stocks, for example, or even some of Singapore shares. Because sometimes with Hong Kong shares, the minimum investment sum can be quite high. All right, it could be very big bought lot units, or the price of the Hong Kong stock can be very high. So you might even need $10,000 or even $15,000 just to trade the Hong Kong stocks. But for the DLCs, you can trade it with as little as a few $100s or a few $1,000s in clip size, smaller clip size, due to this nuance of this product. All right, so you get that capital efficiency by using less capital to gain exposure to the underlying Singapore or Hong Kong stocks. And with that lower capital, you also gain cost efficiency in terms of your transaction costs. Okay.
Okay, if
All
you
right.
have any other questions, you can still put them in the chat. Billy and Marcus will still be here. We will end the webinar in a few minutes. Yeah, so if anybody has any other questions, you can put in the chat. Marcus has also shared the link for the Société Générale website. You guys can feel free to check it out. If you do end up having any questions after that, you can email Marcus. Can we email Marcus? Can we email you?
You can just drop us the contact us on the website.
Okay.
So at the top of the website, there's a contact us form.
Yeah.
Please do drop it there over there on the website. But otherwise, give us a call on the hotline as well. We're happy to answer any questions that you have. All right. So let me just share my screen again, because someone has asked, what is the DLC code? Where's the DLC code? So at the same time, let me just share also the contact us form again. So I'm sharing my website screen again. All right. So our website, dlc.socgen.com. Again, remember this contact us form is here at the top of the website, contact us. So please drop us a text over here, or you can always give our hotline a call as well. This is how you can reach out to us from our website, right? And also on the question on the product codes. So this is a list of all our DLCs, right? Under products, you can click products, you will come to this page, and this is a list of DLCs over here. So under each and every one of the DLC, there is a 4-character stock code, right? So these are the stock codes of all the DLCs, all right, on this column over here, all right? This column over here, right? So for this 7 times long Hang Seng TECH DLC, the stock code is YPCW, So you can go into your stock trading platform, your broker trading platform, and you key in YPCW, you will be able to retrieve this DLC using this stock code. Okay, so yeah, that's where you can find the DLC code for each and every one of our DLCs.
Okay, hold on, let me see. Okay, I don't see any other questions. Would just like to say thank you so much, Billy and Marcus, for your sharing today. I hope everybody um gain more knowledge about this. Like Marcus mentioned, if you do have any questions, you can feel free to call the hotline or refer to their website. With this, we will be concluding our webinar for tonight. So thank you for everybody who joined. Thank you to the two speakers.
Thank
Thanks,
you.
Billy. Thanks, Adele.
Thanks.
Thank you.
Bye.
Bye
Good night,
bye.
everyone.
Good night,
Good night.
everyone.